Alright, so let's take a look at part 2 of our exercise that is titled Reconciling Changes in Balance Sheet Accounts. So we did requirements A and B before, and quite honestly that was by far the biggest part of the workload. So let's go ahead and take a quick recap. Here's our scenario. And so if you want to take a screenshot of this so that you have the information that we're starting off with. We have a selected data from balance sheets 2013 and 2014, as well as selected income statement data for 2014. All right, and so with this data and with some additional information right here as to property and expenditures in 2014, we were able to, in A, determine the original cost of the property as $913,806, and then what was the accumulated depreciation on that equipment at the time of the sale, and we were able to calculate it as $901,373. And you can kind of see how we got there. In step A, we took the expenditure amount and we said, okay, this is what we spent, so this is what we would expect equipment to go up by if we hadn't had any disposals. But then when we subtract the new amount here, the 2013 ending amount, we get a smaller figure here. So the difference between the expenditures this year and the net increase equals the historical cost of the assets sold. All right. Then for the second part A, we took the depreciation expense, which is provided to us here, $3,184,956, and then we took the increase from 2013 accumulated depreciation, which is right up here. And we subtracted that from the 2014 amount. So again, if we hadn't had any disposals, we would expect, if depreciation expense for the year is $3,184,956, we would expect this gap here to now to be the same, but it wasn't. It was only $2,283,583. So that means that we had taken accumulated depreciation of $901,373. So in a nutshell, this equipment was almost fully depreciated. So compute the cash proceeds from the sale of property and equipment in 2014. Well, what we have to notice here, we have to think a little bit backwards. We know that the cost was $913,806, and the accumulated depreciation is $901,373. And what that gives us is our book value amount of $12,433. Now notice up here that we have a gain on the sale of property equipment of $89,483. So what that means is we would add that gain to the book value. That tells us that we got our book value back plus, so we would have a gain. So $12,433 is our book value, and if we had a gain of $89,483, that would mean that we must have received $101,916. Okay, so if this figure here had said, $50,000, we would take the book value plus $50,000, and we would determine that we had something like $62,000 in proceeds. Okay, so this is where we left off. And so now, see if we can fit all this on the screen. I believe we can. They want us to prepare the journal entry. Well, they want us to do two things, but the first thing they want us to do is to prepare the journal entry to describe the sale of property and equipment. So they have provided for us here the first journal entry as a debit. Notice how this is all the way over to the left, and then we have they provided this one credit, so they want from us, looks like, an additional debit and an additional credit. So the cash proceeds 101,916 is what we will put in this box here. And then we also want to recognize that accumulated depreciation has a normal credit balance because it is a contra asset account. It's an adjustment account for assets. So when this was on the balance sheet, if you can visualize this, we had the equipment at 913,806 and then related accumulated depreciation of 901,373. That's not what we would see on the balance sheet, right? Because we have other equipment up here. But that is what was embedded within that figure. Okay, so it has a regular credit balance, but now we have disposed of that asset. So we also have to get rid of the accumulated depreciation on the equipment. So again, this balance was a 901,373, but we have to back that out because we no longer have the asset. Okay. Property and equipment cost. We calculated this previously as 913,806, and do notice that I am crediting this. We have an asset that has gone down, the equipment, and we do that with a credit over here on the right. And then so finally, the last thing that we have to account for, I'll pull the paper down for just a moment, is this gain here of 89,483. And gains have a credit balance, so gain on sale of equipment. And that figure, by the way, that same figure is right here. So I'm just going to put it from that, 89,483. Now what we need to do to make sure that we've not made a mistake is we need to tally up these two figures here and compare them to the total of credits. So let's just do that. 101,916 representing our cash received plus our accumulated depreciation that is being taken off the books of 901,373 equals 1,003,289. Okay, so then if we were to subtract these two figures here out, we should end up at 0. So I'm going to now subtract the equipment figure of 913,806 and really all I have to do is hit the minus sign one time. Now let's see here. Why didn't that work? Let's start over. Thought I had that set up correctly. I must have pressed something I didn't mean to press. Let's see, 101,916 plus 901,373 minus 913,806. Now I'm going to hit the minus sign, and you can see that our figure on the calculator, 89,483, matches our remaining balance. So obviously if I subtract 89,483, I will end up at 0. Instead, I'm just going to clear it out that way. We do have one more requirement on this question. It says determine the cash dividends paid in 2014, and we can do that rather easily because they've provided us really everything that we need. We have net income of $3,029,768. Okay, $3,029,768. And I need to subtract from that what? The increase in retained earnings. And fortunately there is an increase. That means we didn't pay out all of our earnings in dividends. At the end of last year we had $17,319,003 in retained earnings. Now we have $18,876,264. So it went up, but that's a lot less than net income. So whatever this difference is between these two figures subtracted from the net income will give us the amount of dividends paid. So let's go ahead and set that up down here. There are the two figures right here under retained earnings. And then when I move the page down, I don't believe we'll be able to see them. So let's see here, 18,876, 264 minus, that other figure was 17,319,003. So that's retained earnings at the end of 2014. This is retained earnings at the end of 2013. Okay, so let's see what that is. 18,876, 264 minus 17,319,003 gives us 1,557,261. Now this is not our answer, right? This is just simply the amount by which retained earnings has increased. So now we can take our net income, $3,029,768, minus the increase in retained earnings, and we come up with an answer as to the amount of cash dividends paid in 2014, $1,472,507. Okay, so this was a little bit long and drawn out, but occasionally we have questions like this. Do be advised, usually on a test, if you have to take a test on something like this, you can only do a portion of this because this is a lot of information. So you might have a situation on an exam, right, where you either have to do just some of the stuff up here, or you might, if you had to do something down here at the bottom. Well, D is kind of a standalone part, but if you had to do the journal entries, you know, hopefully you would have some of these figures provided for you. By the way, before I stop, I'm going to put a little square around our answer for B. All right, that's it for this video.